Federal Reserve Chair Janet Yellen is learning her own so-called Fed speak. The term popularized under former Chair Alan Greenspan could be throwing off investors. ValueBridge Investors principal analyst Brian Barnier is with me today to parse the parchment. Hey Brian, how you doing?
I'm doing well, thanks.
Brian, we heard Janet Yellen say last week in a press conference that they'd raise rates about 6 months after the taper ended. Then she came out earlier this week and said that the Fed needed to be extraordinarily accommodative. This seems like she's sending two entirely different signals to the market.
You know, Joe, you're absolutely right. That's the way so many people interpreted those statements. But if you listen to her press conference, if you read the transcript, she said no change in policy, no change in policy. She came back to it in the Q&A. And that what she's going through is what Bernanke and Greenspan and everybody went through, is trying to get people to actually listen to the entire press conference or read the entire release. It's kind of like, well, it's opening day this week, and you've got all the people in the skyboxes that are just over there partying along, and at the very end they say, well, what's the score? And they didn't listen to anything else. So there's an amazing amount of consistency in there, and when she was asked, what does probably mean, she threw in that twist.
So do you think she's trying to throw off the markets here?
No, not at all. I mean, she's been in D.C. pretty much her whole adult life, in and out of academia. And they even talk in their minutes about how they're watching the market reaction and trying to understand how to communicate better.
We've got the big jobs report that is coming up on Friday, expecting about 200,000 jobs added, 6.6% unemployment rate, which would be a slight dip. Is there anything out of this jobs report that we can expect a change from the Fed to come?
Oh, I think that's looking at the wrong numbers.
Okay.
Now, Yellen says U3 rate, that's still sort of the most important summary rate, but given our current environment, it's not the important driver. She ticked through a whole bunch of important things. You look at, and we've talked about these all last year, decades of disillusioned workers, the dread spread, all these sorts of things that she mentioned. The thing right now that's key is looking at the wages and salaries number, the labor productivity index, and the sales numbers. And those combinations are telling a lot in the story.
All right, Brian, as always, a quick summary of things, wrapping up and hopefully helping out investors in the space. Thanks so much to Brian. He is from ValueBridge Investors for TheStreet in New York. I'm Joe Deaux.